So we'll start the discussion off at Will. Will, it's been a wild year. How has your investment strategy changed or not since March?
Yeah, thank you for having me. Really appreciate being included with these the other panelists. And I think the first thing we've had to look at since we started investing is what did COVID mean for businesses, and was there a uniform impact on COVID that would have on businesses? And if not, what were the counter-cyclical sectors we may see? And just before we started the panel, we talked about Zoom. Zoom's earnings up, I think, 146% today, and the market cap, in the $85 billion, already trading at 60 times revenue. So there are clearly investors out there looking for products that will be countercyclical, that are about the future of work, that are helping companies do more with less, drive workflow efficient, automation, reducing costs and what have you. And so what we've had to do is really reassess our portfolio and our pipeline and trying to understand the COVID implication response.
Brent, do you mind tagging on there and sharing your insights?
Yeah, I think your question, Jack, was how's our strategy changed since COVID started? And the short answer is strategy really hasn't changed much at all. We've been focused on B2B and marketplace businesses that are oriented around millennials and Gen Z now, what we call the digital native economy, for over 5 years. And that seems to be a sector that's benefited and had almost more tailwinds than headwinds. Doesn't mean we haven't had challenges, but in general, that I think is a thesis that is well positioned for the way we're all conducting ourselves right now. What has changed is just the process and the way we have to meet entrepreneurs, conduct diligence, get involved in governance on an ongoing basis with companies. Those things have changed for us the same way they have for companies in our portfolio and the way they're operating. But just to go back to the question around strategy, not much change at all.
Len, how about for you and for Madrona?
Yeah, no, I looked at the numbers and we're actually investing at a faster pace than before COVID. So we are investing out of our 7th fund. It's a $300 million fund. We've made 15 new investments this year. 11 of those are 8 of those are after COVID, sort of roughly when COVID hit. We've had 11 follow-ons, and 8 of those are follow-ons that happened after COVID. So, I think our philosophy is most of our big wins are companies that have taken 10 to 15 years from the time we invested until they became big winners, with Smartsheet, DocuSign, Apptio, companies like that. And so we're not that focused on what does the current economic environment look like. We're more focused on what do we think it's going to look like over the next couple of decades, because that's the horizon that we think about our companies maturing and becoming category winners.
Brent, I'm going to direct this next question at you, just because historically, even years prior to all the work from home initiatives starting in March, the future of work and particularly distributed teams has been something you've talked about a lot. So starting with you, how do you think work from home is going to continue to impact, call it, investment and entrepreneurial activities outside of core startup hubs, outside of the Bay, outside of New York, et cetera?
Well, I think there are probably 2 impacts. One is the impact on being able to attract investment capital from some investors that would have been not on the usual suspect lists for a given market or region or city or ecosystem. And right now, the same experiment that companies are having to live with remote work is one that firms like ours and the others on this panel are having to adapt to as well. And I think there are a lot of eyes being opened for early stage investors, growth investors, who are now starting to conduct and having some success with the virtual nature of identifying promising companies. And maybe that starts to extend and geographic boundaries start to go down a little bit. And so do I think we'll see more willingness from investors willing to go to different ecosystems than they considered before? I do think that will be one of the outcomes. The second impact, and I think that's very good for ecosystems like Boise and markets like that. The second impact is probably on people and the ability to attract really great people. And I think that comes in 2 forms. One is, again, you've got more willingness, I think, to work with team members who are remote. So instead of having to recruit somebody for a role that you thought had to be done locally in that ecosystem, now you can cast a much broader net, go after some really great experienced people that might be out of market, and they can work for the company just like some of the other core team members can that have shifted to remote work. And then the second impact on people, I think, is just this mass migration that is reality, because I'm seeing it every day, from large developed ecosystems to new places to want to live and work and enjoy a different lifestyle. And I also think that for companies based in attractive lifestyle markets, and that could be Boise and Salt Lake City and Bozeman, I think that's a real advantage for companies in those markets, is the ability to attract people there.
Len, if you don't mind, I'd love to kick that question over to you for your perspective. And I say that just because I know you've spent some time in Idaho over the last several months, and curious how you're thinking about kind of the shift of the workforce as it pertains to the investment and the entrepreneurial community.
Yeah. Well, a couple things. I mean, 90% of Madrona's investments are in the Northwest, which for us is broadly sort of Portland, Vancouver, BC, and Seattle, and we'd love to do things in Boise. So we're very regionally focused, but not focused on companies that are great regional companies. We were original investors in Amazon. We're investors in companies like Smartsheet and Apptio. So we think of ourselves as wanting to back global companies, but that are headquartered close enough that we can be helpful to them. I think, and look, one of the things that's happened in Seattle is there's a lot of talent here. That two of the top 5 most valuable tech companies are here between Microsoft and Amazon, but it's gotten more expensive here. And so we do have an eye toward looking at companies that can let people work from places that are more efficient, where they've got great talent and good schools. I think that the one cautionary note that I would make is I'm a little worried about the inexperienced entrepreneur that underestimates how hard it is to build culture when it's distributed. And I know that it's going to sound old school, and I'm fine with that. Having started or helped restart a couple of companies myself, there's a lot of value to being able to walk down the hall and talk to people and compare notes, especially in the early days when you're trying to dial in product market fit. You need really great collaboration between product teams and marketing teams and sales teams. I think it can be done virtually, but I think it puts a huge premium on the classic things you have to be good at as a founder: communication, follow-up, documenting meetings, making sure people have clear objectives, really being great at recruiting and onboarding people. I think all of those things you have to be even better at and think even more about in a virtual environment, because after that Zoom call, everybody disappears and you can lose. It's not so much about work ethic, but just the cohesion and commonality of purpose that you get when everybody's in one place is, I think, more challenging to do virtually. And I think it's possible, but we will really look for entrepreneurs that seem and feel like they've got those kinds of skills in spades, because I think there will be entrepreneurs that make the mistake of thinking, hey, this is great, everybody can log in virtually and we'll be in good shape. I think it's harder than you think.
I'd like to add on to what Len said. I think that's exactly right. The big thing that we have yet to see is you have companies that already existed, had already established some culture when things changed in early March. And so it's one thing to have established a company and then to send everybody away to work remotely. It's another to have to build it from day one. So startups that are going through their early stages of development right now and having to build a team, recruit people, start to communicate and be transparent, set goals and objectives, and do that in a completely remote environment to establish culture from day one, I think that's going to be extremely hard.
Someone else that I talked to had an interesting insight the other day, which I think is worth repeating, which is that one dynamic that could happen if you recruit a lot of people remotely in this environment, let's say your company's headquartered in Seattle, you have a bunch of employees in Seattle, and they all went to work from home for the next N number of months. And let's say in addition, you also hire a bunch of people from other markets and other cities that are not where your headquarters is. One of the challenges is that when things get back to normal at some point and a lot of people come back into the office and start working from the office again, what will happen to the people that were sort of hired virtually but now don't get the benefit of being in proximity to the office? You'll have all these people that sort of are happily coming back to work. And if you're not careful, those folks that were sort of hired remotely and that don't have the opportunity to come into the quote unquote office may feel disenfranchised. So again, it's another dynamic that someone smart that I was talking to the other day pointed out that I think is also an important thing to manage well. Otherwise, those people could really feel sort of left out when and if we all get to work back in an office together someday.
Huh. It's a fascinating thing to think about on, down the line. It's interesting how often I hear people say, they express their excitement about, the opportunities that arise from a work from home culture, but, not really acknowledging that as a potential roadblock down the way. That's an interesting thought. I'm going to shift gears a little bit here and focus in specifically on Idaho, if you guys don't mind. As you think about deploying capital over the next couple of years, and Idaho's kind of in your mind, and it's a strategy for everybody on this call. What do you think Idaho's good at? What are you looking for here? Where might you be looking for those businesses? Then ultimately, is there a higher bar for businesses in Idaho for your firm specifically? And maybe since it's been an outwardly expressed investment strategy from Will and his team. Will, do you mind kicking this one off?
Yeah, not at all. I mean, I think, for us, we look at through our lens what we're interested in. We're a B2B investor looking for recurring revenue products. I think where we're focused on are just companies that are somehow able to get to $25,000 to $75,000 a month in revenue. And then again, we're interested in companies that are like the $3 to $5 million in revenue. Those are kind of the two holes we think exist in the market in the Rockies, where there's not a natural constituency to invest there. And to me, Boise in particular is perfectly placed to attract more capital. I think it's always fascinating when there's markets that are underpunching, I guess, their weight versus overpunching. And I would say Boise right now is probably underpunching in terms of the number of companies that are being funded there, but I think with the success of T-Sheets and others recently, and certainly Clearwater Analytics that you know really well, there's plenty of pedigree there and success and examples of what can come out of it. So I just think it's a question of time, honestly. But I would bet the next couple of years are going to be super dynamic and exciting in Boise, and a lot of quality companies that are either alums from those prior companies I mentioned, or people that are moving to Boise and looking to bring their ideas and companies with them. So I'll leave it there.
Listen, I'm very optimistic about Boise and the state and the region in general. It's why I moved from Chicago to Salt Lake City 4 years ago. It was a similar bet. And the bet at the time was that the outcome that Omniture had been through, and then things like Ancestry producing great talent for both engineers and go-to-market specialists, would have an impact. And we could point to companies at the time that were still a little bit below the radar, like Qualtrics and Pluralsight and Lucid and Health Catalyst, that were in that next wave that we thought would also be very good for the ecosystem. And it just takes a couple of those to really have this spawning effect. And what Will just mentioned around T-Sheets and Clearwater and hopefully Aptitex very soon as well, if they can have a similar type of impact on the ecosystem, then I think those can be real catalysts for a wave of great companies.
Yeah, I'll just jump in with one more thought. I think the way we think about Boise from Madrona's perspective is you have some really specialized talent. I mean, obviously the legacy of HP and Micron, you've got deep embedded systems experience and deep kind of semiconductor experience. The embedded systems experience in particular, for companies like Cradlepoint, where we're not an investor, but there's an interesting set of companies that are sort of the combination of software and hardware, and we think Boise is uniquely situated because of a lot of the talent there to develop those types of companies. So that's really interesting to us. I mean, we don't have as much of that kind of experience. For instance, in Seattle, we have lots of enterprise software experience, lots of e-commerce experience from Microsoft and Amazon, and probably a dozen or 24 more public companies. But that's a unique capability that we are intrigued by.
Well, as we wind down to a close here, what advice, maybe a sentence or two, would each of you give, or what suggestions would you give to Idaho entrepreneurs seeking investment from your firm or firms like it? And maybe Brent, we'll start with you here.
Yeah, I can think of three things in particular. And one of them is kind of time sensitive, given the global health crisis and the uncertainty of knowing when this disruption will end and what it really means long term. And that is just stick to the conviction that made you focus on entrepreneurship and solving a big problem to begin with. There is no shortage of news that can create gyrations in entrepreneurship right now. And so it's a time where deep conviction, I think, really matters. The second is a real focus on getting to market and testing product market fit and iterating as fast as possible. It's going to be a very confusing 6 to 12 month period where growth rates are going to vary more in good, similar caliber startups because of the markets that they're in. So judging quality will be really difficult. Trying to demonstrate product market fit is a thing, and like high engagement, low churn, things like that, and adoption are going to be the metrics that really stand out. And I think those are the two pieces of advice I'd focus on.
Kind of three specific areas of feedback that I would give entrepreneurs, in particular from Boise. One is ambition. I would just say, there are companies, there are plenty of people in Idaho who have played on a big scale, and those are the kinds of companies we want to fund. And so I would just encourage entrepreneurs to think about, we at our firm want to fund the next DocuSign, the next Smartsheet, and think big. Just because you're from a market that maybe isn't as big as the Valley or Seattle does not mean you should aspire to building a more modest sized company. And certainly it's not what's interesting to us. And I don't think there's any reason to shoot lower than that. So I think, I'd be bigger and bolder on ambition. Venture firms want to back companies that can be $200-300 million plus revenue stream businesses that can go public. They won't all get there, but that's what we aspire to. So that's one. I think two, understanding the competitive dynamic is really important because, we assume if you've got a good idea that there are 20 companies in the Valley that are doing something very similar. Doesn't mean you can't win, but I sometimes see not enough rigor put into really understanding who else is out in the ecosystem and what will be different about your approach. And so that's a second. And then the third I would just say is think about how you'll build a complete executive team. Do you think you can attract all of those people in Boise? Do you think you'll need a hybrid approach and have some of your team not in Boise? But one of the questions that we will have is, will you be able to build a world-class team there? And if so, who are the types of people you think you would attract, even if you haven't hired them already? Or will you go with more of a hybrid approach and keep some of the company in different parts of the market or different parts of the country? But I think addressing that question early with, here's the kind of world-class team I want to go build, is really important. I mean, we backed Amazon in the early days, and back in those days, 25 years ago, Seattle wasn't thought of as a particularly interesting tech city. There was just Microsoft and Boeing. But when my partner Tom met Jeff, he didn't think, well, here's a guy that's trying to build an interesting Seattle company, and that's just the best he could do. He was thinking, I'm going to build a global company. There's a reason I'm putting it in Seattle, and I'm going to attract the best talent I need, no matter where they're from. So take that attitude, and I think it will serve you well.
I love that. Thank you. And maybe closing off with Will. Will, you've been building in an ecosystem not too dissimilar to Boise and to dramatic success. So what would be some of the points of encouragement or advice you'd give to Idaho entrepreneurs pitching firms like yours?
To me, I think there's obviously a need for entrepreneurs, and entrepreneurs drive markets. But the entrepreneurs are there. I'm convinced of that. What's not there probably is the amount of seed capital that can get a company to get to a point where a Series A can be credibly raised by a national firm. Those national firms have very well-defined requirements for investing. Typically, they're somewhere around 1 to 2 million in ARR, and in a B2B or software case, and then if it's a consumer case, it's daily active users, monthly active users that you're seeing on your application, across time. And so, really recognizing as an entrepreneur that risk has been placed on you by the venture community, that you have to carry the ball way further than your predecessors ever had to. If you're in a remote market, it's even further than that. And you've got this catch-22 you have to solve, which is, well, how am I possibly going to generate $1 to $2 million in revenue or an app that has got, 1 million MAUs if there's no money to get me there? And so I would just say, again, I guess in summary, which would be like, lack of capital is not because there's not return. It's because there's not enough structured opportunities being presented to venture firms that meet their thresholds. And the question to ask as an entrepreneur is, how do I raise the capital to get me past those thresholds? Knowing that they're totally binary. If you're not above those thresholds, they will not be interested. It'll be like, it's come back when you're where XYZ or some future state. And it's a very frustrating place to get punted to. So to me, like for Idaho to really kind of start catching fire again, I think there needs to be more active seed capital that's supportive earlier in the process, allowing Series A firms that are national firms to sit back and wait for those firms to bubble up across that binary line and then pounce with interest once it's there. And so all the work on entrepreneurial development and companies getting started, if there's not, again, just being a little repetitive here, but if there's not really strong early stage investor interest, I don't think companies mature to the point where they can capture that Series A and start shifting the narrative on the ground. And so that's been our experience here. I mean, there was hardly any venture money here from 95 to 2015. There was $140 million invested in Montana total over 20 years. Since 2015, there's been over $450 million invested here. What's the difference? Well, certainly COVID's new, but that's relatively new. What really changed was that there was just enough seed capital here to get companies to graduate, if you will, up to where Series A firms took things seriously. And before that, the number of firms that took SBI and SDTR loans is long, and that alternate source of funding really does become a bottleneck or a curse in some sense, because again, you just focus more on what's the next research grant, less on what customers really want to buy from you and what products will satisfy that customer need. So that's what we've seen here, and hopefully that'll be relevant for you as well.
Well, guys, sincerely, thank you so much for your time today. We've had a great discussion, a lot of incredible points for everyone to take away from this. So Brent, Len, Will, our sincerest thanks for your participation in this panel and your ongoing support of the Idaho startup ecosystem, and specifically today, Boise Startup Week. To the attendees, thank you very much for tuning in. You can find all these gentlemen on their LinkedIn profiles. Cheers.